How's it going, guys? Moed here. Welcome back to another video. In today's lesson, we are going to be taking a look at why us as smart money traders don't like to use support and resistance and why we believe it genuinely doesn't work in the long run. Now, when I say it doesn't work, I don't mean that support and resistance setups don't actually occur in the market. They do. It's just the fact that it's much harder to be profitable with this type of strategy, whereas a smart money strategy is much simpler. And I'm going to explain to you guys exactly why in a second. Now, before we get started in this lesson, first of all, I just want to say, guys, make sure to head down into the description down below if you want to get access to our free Discord server right there. So make sure to head down to the description below. As well as that, guys, we are coming out with a brand new website literally in the next few days. So this is going to absolutely change the game. As well as that, we have a brilliant new update as well coming onto our app and a brand new design. So really excited to announce that, guys. So if you guys are interested in hopping on, getting access to our signals, our courses, etc, make sure to head into the description down below and head on to fuacademy.io and get yourself set up there. Okay, so let's get right into why us smart money traders, we don't like to use support and resistance. Now here I'm going to bring up this drawing app because this is going to be much easier for me. So I'm using a drawing tablet. It's going to make my diagrams much easier to understand from now on. So pretty happy about that. Now, firstly, let's try and understand what support and resistance is from a retail perspective, okay? So when we are taught support and resistance, we are taught that basically it's the most easiest example, the one that I've heard even when I started, was think of a floor, okay, and a ceiling. Okay, so we basically have a floor down here and we have a ceiling. And what basically occurs is price action will be trading in the constraints of this floor and ceiling. So price will be bouncing from the bottom here and then bouncing the top. The bottom, then the top. Bottom, top, bottom, etc, okay? So this down here is called our support. Okay? And then this right here is our resistance. Excuse me for my drawing and my writing, because I'm only actually getting used to this now, so it's still kind of a bit difficult to exactly draw where I wanted to draw, you know. But as I said, this is our support, this is our resistance. So what are we trying to do here as retail traders? We are trying to sell each time price reaches our resistance. Okay, we're selling. Each time price reaches our support, we're trying to buy. Now let's just try and form a simple setup. Okay, so how do we spot our resistance? We see that basically price is reacting. Okay, price is reacting from the same area multiple times. Okay, so from a certain point of interest, you'll see that price is reacting and it's failing to break up above this high. Okay, so each time it reaches this level right here, it fails to break. Each time it reaches this level right here, it fails to break. So it keeps occurring, touching, and then reversing. Okay, so what would kind of be the most high probable thing to do if this is what I'm taught is obviously to buy at this support and buy at this resistance, because in the past it's clearly been proven that each time price reaches this level, it reacts. So that means I'm going to be looking for sells at this area, right? So I'm obviously going to be looking for sells the next time price reaches this level. So when I am obviously trying to look for a sell right here, okay, I am going to be taking my entry right off of this area. Okay, the pen right there. Okay, taking my entry right off this area, placing my stop loss probably above the previous high. Okay, above some sort of previous high, maybe to the left right here. Okay, and then or I could potentially have my stop loss like 10, 20, 30 pips above my entry. Okay, so I could potentially have a rule that I've made for myself. Okay, so when I'm doing this, okay, a lot of the time, what you're going to see is obviously sometimes it's going to work. Okay, sometimes you buy, okay, sometimes you sell, and it's working. Okay, obviously it clearly worked in the past right here. Now, the more touches that we get to see, okay, basically this is the stronger that level is becoming. Okay, this is just basic understanding now of support and resistance. I still haven't gone into why we don't trade this yet. Okay, so now if price is reaching this level, my natural instinct is to be, okay, it has touched here nearly 5 to 6 times. my next thing to be would be to enter a buy right here. Okay, I'm looking to buy right here, and my stop loss is probably going to be down below a certain low, whatever it is, or I might have like 20-30 pips down below here, and I'm looking to buy from this level. Okay, that's a simple thing. Now, what do you notice right here? Okay, what do you notice right here? Especially at a clean level right here, all a support and resistance is doing from a smart money perspective, okay, all it's doing is accumulating liquidity. Okay, so we're building up liquidity, okay, money below the lows and below the highs. Sorry guys, I had to pause that video there to find basically where my eraser was and how to change the size of that, but done now. So as I was saying, basically above and below the equal highs and equal lows is liquidity being built up, and the more touches we have right here, okay, the more liquidity being built up below these levels. Now, how's liquidity being built up? It's basically all the retail stop losses that are being placed down here. Because think about it for a second. If everyone is trading the exact same technique, if everyone's trading the exact same technique and it's available on YouTube for free, stuff like that, then the banks, okay, the institutions, the smart money is going to know, okay, where your stop losses are going to be placed. Okay, simple as that. Because if everyone's trading support and resistance, then I can pretty much guess that the majority of stop losses are going to be right here, because I know that this was a setup taught online, okay, or this is a setup that just everyone pretty much trades. Okay, so that is considered our liquidity, our stop losses below the lows and below these highs. And now the simple understanding is that for every single trade, there's always going to be a loser and there's always going to be a winner. And the smart money, okay, the big institutions, basically, they always have to end up smacking you out of your position, okay, clearing your liquidity before taking price in their own direction, basically. This is due to the fact that in order for them to get filled into their positions, they have to make you sell your position back. Because what are you doing? Okay, when you're buying right here, okay, you're buying contracts. When your stop losses hit, all you're doing is basically selling your contracts back to the market. Okay, when you're selling your contracts back to the market, now there's going to be contracts available in the market. The institutions are going to be able now to get their orders filled in, because they simply just can't go into their MT4 or whatever software that they use and just click the buy or sell button. Okay, that's not how it works. Okay, so in order for their positions to be filled in, they are letting everyone accumulate their stop losses above these well-known patterns that everyone is taught. And then what you're usually going to see is some sort of sharp move to the downside or upside just before your trade plays out. And then eventually it goes in your direction. So this is something that you'll always see. So you'll see a consolidation, a build of liquidity on the top and the bottom. Okay. And then you'll get some sort of sharp move down. This is called my manipulation. Okay. And then you have your trend. Draw in caps instead. It's probably easier than reading my joint writing. Okay, so then you have your trend. So what you notice right here down at this manipulation is where us smart money traders focus in on most. This is where we focus in, because we wait for this manipulation to occur, then we look for a position to get in. Okay, once we get that break to the downside, that fake out, okay, then break to the upside, okay, break structure, then we look to get in. And this is usually going to be our FU candle and an institutional candle somewhere in this area, and then we look to buy from this area right here. Okay, now let me explain whose stop losses are being manipulated right here. Okay, because this might not make sense to you right now, but I will show you exactly who is getting manipulated right at this level. Now if I can yeah, I'm gonna make a new one really quickly. Okay, so who is being manipulated at this level? Now let's quickly draw my support and resistance really quickly again. So my resistance right here, I have my support. Now where our stop loss is going to be based off of multiple different strategies. Now first of all, the people that are trying to buy, these are the first type of traders that you're going to have. The people that are going to try to buy the support, either market execution or buy limits, whatever it is, they're going to have stop losses sitting below here. Then next, you're going to have the people that are actually smart enough not to get in straight away right here. And what they realize is, okay, they realize that manipulation is going to occur. A fake out is always going to occur. So what they wait for is, sorry, not a fake out, a breakout. So what they wait for is that break. Okay, so they wait for the break, okay, below right here. And what they have right here is sell stops. So they'll have sell stops set right here, and they'll also have buy stops set right here. So wherever the break occurs, it doesn't matter. They'll get into their position once their stop gets triggered. Where does their stop loss become then? Their stop loss becomes right here. Okay, this previous higher or whatever it is, because this is now their buy, this is their stop loss, and then their take profit is probably up above here. Same thing right here. This becomes their stop loss, this becomes their entry, and this becomes their take profit down here. Something like this anyways, okay? Those are the second traders. Then you have even smarter traders. These guys, they know that there's a breakout eventually going to happen. They also know that this breakout usually is a fake out. So there's a fake. They know that this is a manipulation. So what they'll do is they'll wait for this previous support to become newly found resistance, and they'll wait for the retest, and they'll try and scope their entry from this retest, and then they look to sell from here. These guys as well get smacked. So these are, you can call it a bit more experienced, a bit more advanced, because a lot of people, once they get a bit more into trading, they're not just trading this basic concept. Okay, I understand this is basic, but this is something that's still used by many, even people that have been trading for years, because, okay, this is still being used by many. And I know you might ask yourself, why are they still using the concept? Why are they still using the same concept for years and years and years? Because it might make sense to you from a clear mind perspective, but when you're actually in this mindset where the market is actually giving you some, okay, but it's slowly taking some away from you, and it's giving you some, and it's slowly taking away, and it's taking even more away from you, you don't even realize it because you're not in that clear mindset, and that's what emotions can do to you. Okay, so just as long as these setups are working every once in a while, then people are gonna still happily trade these. Okay, and what they'll do is probably blame it on something else and try and fix another aspect of the trading, and basically blame the problem on that, whereas they're not realizing that your strategy is the problem and you're trading against the big waves, you're trading against the market makers. Okay, this is why you'll never win. There's a clear reason why 96% of people lose and only 4% win. The 4%, okay, are going to be the big banks, big institutions, okay, and as simple as that, because in every single industry, who has the most money is always going to be the winner. Simple as that. Okay, so that's what we try and do. We don't trade with the banks, nothing like that. What we are trying to do is spot their manipulation, let the manipulation occur, then we get in on the trend after that. Now, in this scenario that I was showing you guys right here, if I delete this really quickly. Okay, perfect. Okay, so as I was saying, in this scenario that I just explained right here, so as I said, you'll have your 3 traders. The breakout traders get their stop losses hit on this move up. The people that have buy limits and buy stops, buy limits and market executions, sells, stop losses right here, they get their stop losses hit right here. People with the sell stops get their stop losses hit right at this level. Okay, and then as well as that, the people with the retest, okay, so when they wait for that retest and they use this as newly found resistance, they will get their stop losses hit around this level as well, or maybe a little bit above as well. And then the trend occurs. So you can see how 3 type of traders right here, just like that, are getting smacked out of their position in the market. Okay, so you can see that right there. Now, if you take a look at this in the market, I'm going to show you 2 quick examples because I don't want to take too much of your time, guys. Look at this. What do we have right here? We have a resistance. Okay, resistance. And then just before we even reach that support right here, what do we have? We have inducement of sellers. Okay, so we try and get more sellers in this resistance because the more touches right here, the stronger this area becomes. And then look, they sell, and then straight away, boom, big bullishness, big volatile push up, clear that liquidity up top right here, and then it goes in the direction. So yes, the sell was correct in this scenario, but it smacked them first before moving down. This is why they needed to get their positions filled out first. Okay, filled in. Then you have that retest on that institutional candle, and then you get the sell off. So right here, we're not looking to sell from this area. We're actually looking to sell from this institutional candle after the manipulation occurs. Okay, so that was an in-depth lesson, guys, a bit longer than what I usually do. These type of lessons, I usually keep them for the course and the Zoom calls, etc. But I wanted to kind of clear up some misconceptions, etc. with support and resistance, and why we as smart money traders. Now, we are retail traders technically, okay. We just call ourselves smart money traders because we look at what smart money does. We're not actually smart money traders, okay. So I always like to clarify this because a lot of people seem to get confused and they say that we're institutional traders or we're bank traders when you're actually not. Okay, so I appreciate everyone for hopping on this. Appreciate everyone for watching this video. Hopefully everyone gained some value. As I said, guys, make sure to head down to the description down below if you're interested in hopping on our free Discord server. Once again, thank you guys so much for watching. Please drop a like and subscribe, and I'll see you guys on the next lesson. Have a good one. Bye bye.